Welcome to Volume 5, Issue 22 of the Master Investing Newsletter. This week's ex-dividend date is the 30th of May, 2019. Okay, who are our candidates? We have four. National Grid, Marks and Spencer's, Whitbread, Sage. In total, we could expect 1.4 billion. 1 billion is National Grid all by themselves, okay? And then 400, nearly 400 is belong for these three. So if you think it through, the big boys, the money is going to be here with National Grid more than the other three, because the big boys are going to be, obviously this is going to feed them more than these ones will feed them. And what does that tell us? It tells us that the liquidity will be here. The liquidity will be here with National Grid next week. Okay, so what's the return on investment? National Grid for professionals, 76% as a derivative. In fact, I'll start here. 3.8 dividend yield, 2.9 dividend yield for Marks and Spencer's, 1.5 for Whitbread, and 0.8 for Sage. And then for the derivative, it's 76.6 for professionals, 57.7 for professionals on Marks and Spencer's, Whitbread 14.7 and 7.7 for professionals. Non-professionals can expect 19.1. 14.4 for Marks and Spencer, 7.3 for Whitbread, and 3.8 for Sage. Let's jump down and straight into National Grid. Now, this is obviously the heavyweight for this week. Not only is it the one giving them the highest return on investment, it's also the one with the highest liquidity. So just remember, the money is going to be here. And in fact, it's possible that because a lot of money is going to go long here, the drop might not be as great. So let's just bear that in mind, okay? All right, let's go with this one. National Grid PLC is an electricity and gas utility company focused on transmission and distribution activities in electricity and gas in both the UK and the United States. The company's segments include UK electricity transmission, which is engaged in high voltage electricity transmission networks in Great Britain, UK gas transmission, which is the gas transmission network in Great Britain, and United Kingdom liquefied natural gas storage activities, UK gas distribution, which includes approximately 4 of the 8 regional networks of Great Britain's gas distribution system, and US regulated, which includes gas distribution networks, electricity distribution networks, and high voltage electricity transmission networks in New York and New England, and electricity generation facilities in New York. Its other activities relate to non-regulated businesses and other commercial operations not included within the above segments. John Pettigrew is the CEO, Anthony Agg is the Chief Financial Officer. They're number 18 in the FTSE 100, and they have a valuation of 27.9 billion. Let's look at their fundamentals. 2014 turnover was 14.8 billion, and then it went up to 15.2 billion. It dropped 13.2 billion, up again 15 billion, up again 15.3 billion. So that's kind of bouncing around a bit. Then you got profit 2.7 down to 2.6, down to 2.3, down to 2.1. So we've got a nice downhill slalom going on here. And then in 2018, that gets reversed, 2.7, right back to where we started, more or less. If we look at the profit margin, it shows us here what's going on. We can see in the first year, 18.6. In other words, let's say £18.60 for every £100 of sales was dropping into profit. Then that went from 18.60 to 17.30, up to 17.60, down to 14.50, up again to 17.80. So these three are in the same ballpark. That one was a poor year of cost control, and that was a good year. We said that these guys, they want to pay a dividend of £1 billion. They made profit of 3.6, and they have 300 in the bank. So they're going to have to liquidate some assets, or they're going to have to borrow the money, or they're going to have to collect some debts. They may have outstanding debts here. So there's some debtors. So if any of you guys haven't paid your electricity bill yet, please pay the electricity bill before they pay their dividends, so we don't interrupt their ability to pay their commitments. So that's basically what's going on there. Now, we also said that their valuation in the stock market was 27.9 billion. So 27.9 billion. And if we look at all their assets, it's 18.8 billion. So if you wanted to buy this company and take it off the market and then flog all their assets, you would be making a loss. Okay, you were spending 29 billion to pick up an 18 billion pound net asset. Once you pay off all liabilities with the assets that's there. So this is not trading at a discount. It's trading at a premium to their book value. This is not, the net assets here is no book value. All right, so that's that. If we look at the P ratio, which is the price of the stock compared to the earnings, they are relatively cheap. Well, they were relatively cheap in 2018. Okay, 13, 16, 20, 20. That's kind of in the teens and the 20s, near enough, and it drops to 8. Okay, so what could cause that? Well, what's going on here is the profits are going up and the share price is coming down. See, the share price is £8, £8, £10, £10, £8. So it goes back to the normal £8 range, but the profit is up. And when the profit goes up and share price goes down, then we're going to end up with a bargain on our hands, relatively speaking, in terms of P ratios. If we look at the trend in the share price itself, these candlesticks are monthly, and we can see it peaked here in July of 2016, and then it dropped. It bounced up again in May 2017, and it's basically been cycling down until March. Then it started to bounce up, and really it's been going sideways ever since. I would say from May. May it's been going sideways, bouncing up and down, but in this range. So it's gone nowhere for basically a year. It's flat. All right, that is National Grid. Hi, this is Miles from Milestone Investing, and this is a quick update on a company called National Grid. National Grid went ex-dividend on the 30th of May. Now, what this means is that the qualification date to pick up 6 months dividends was on the 29th of May, Wednesday the 29th. And then what typically happens is that when a company goes ex-dividend, the share price drops by the size of the dividend, usually. So this is the closing price here. And then if you deduct the dividend from the closing price, then you get this price here. And if you base it on the lowest price of the day, then this becomes the adjustment for the dividend. So for fundamental reasons, the share price will fall by the dividend. Then, so what happened is on Thursday, it was bobbing along here. Then on Friday, it hit again the support of that dividend drop, and then it started to climb up on Friday, the 31st of May. And then on Monday, the 3rd of June, it started to kind of move up, and in the afternoon, it gave up some ground. It started to fall again on Tuesday. And then from Wednesday, and again, it hit the support at the closing price for the dividend. And then it basically, on Wednesday, 5th of June, started to really head uphill now. And then on Thursday, the 6th of June, it gapped, it basically shot up first thing in the morning, went sideways for most of that morning, and then it started to edge its way up. And then on Friday, the 7th of June, it passed the magical point. So I'll just come back to it in a minute. We crossed that green line and then basically was up here. Now, at the moment, today is the 12th of June, and 3 o'clock, 12th of June, and basically it's in this region around 8 to 21, what it says on the screen there. The highest it was on Wednesday, the 29th of May, was that green line. The lowest it was that red line. So basically, had you traded and gone long to pick up the dividends, then basically you've got the dividends and you've now recovered the, so if you sold the shares on Friday, you could have sold the shares without a profit and got the dividend. All right. So you might think, well, why is that even that special? Well, let me share with you what it all means. National Grid was paying a dividend of 3.8%. Now, if you use a derivative like CFD, or if you use a platform called spread betting, you could have picked up that 3.8% dividend, right? But instead of paying the full value of the shares, you only put down a deposit. So a professional could put down a deposit of 5%. So a 3.8% dividend, when you're only paying 5% of the money to get that, it's like putting down a deposit on a house. You don't pay the full amount. So you put down a 5% deposit. That dividend yield, or the derivative yield, jumps from 3.8 for the dividend to 76.6 for the derivative as a professional. If you're a non-professional, you're making 19% because you've got to put down a 20% deposit. So the higher the deposit, the less the return for you. What does it all mean? Let's go with the professional numbers. It means that it's taken you just over a week. This is Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. It's taken you a week to make 76% return on investments by buying a company as solid as National Grid. Professionals made a 76.6% return in 1 week. In 1 week, not in a company that's flaky and risky, but in National Grid, a company that is pretty safe. It's in the top 100. It's in the top FTSE 100, and I think it's number 18 in the FTSE 100. And the bottom line is, within a week, or just over a week, you made 76% and you got your money back. What does that mean? It means you can sell the shares and do it again. I know you couldn't do this, but let's say you could make 70% a week. Every week, 70% a week, or 20% every week. You would not need too many healthy weeks to make a fortune. I hope you find that useful. This is Miles from Milestone Investing. Take care.